All right, guys, let's do a quick audio check. People are starting to pile in, so if you can put into the Q&A chat box if you can hear us loud and clear.
Test, test. Welcome, everyone. Hey, Kevin. Hey, Ben.
Hey, everybody.
What's happening? I feel like it's been a while.
It has been a while. It's been a few months and enjoying school time off and summer break.
Yeah. All right, cool. Thanks, Cody. Thanks, John. All right, so we will get started here in just a minute. We'll allow some people to pile in. And so tonight, we wanted to really just host a quick event, something that could be Q&A with the master of notes, Kevin. And, so you guys can really kind of bring some questions to the table. And I've got some that people, I actually had a conversation today that I thought would be perfect for this call. And hopefully he can make it to the call. But if not, I told him we'd address it on here at the least. And, Kevin, I would connect you regardless. So, but hopefully you guys got some good questions about notes. We just want to make this really educational, Q&A, quick fire. If you have a specific deal you want to take a look at, I think we could probably even do that as well. Talk about it a little bit. So, but Kevin, Aaron, any color that you guys want to add?
Yeah, this will be great. We're excited to have a little bit of a fireside chat and want to be a little bit more interactive. There's Kevin as always is at the forefront doing a lot of research and data analysis and, plugged into various paid subscriptions that are more at the institutional level to gather his findings. And we're excited to share, some of those insights and what's coming ahead. And then, what kind of a preview, if you will, of some of the stuff we'll be talking more about in person live in September, which is actually over my birthday weekend.
Right.
That we'll be doing in Orlando. So we'll have a big party.
Yeah, shot time.
Yeah. So it'll be a good time. So we're just kind of like going to be a little bit loose on this and really answer questions and see what's going on, with your situation and how we can be of service. And then Kevin has some slides he's prepared, so it'll be great. Kevin, what do you think?
Well, yeah, I really was looking more. It's been so long since I've been on the road, and coming off the road after 10 years, I guess, of being out, twice a month and just, living that routine and everything, and then not going out for, I guess, almost 2 years now, is a strange thing, and it's an adjustment for sure. I do plan on, of course, going out and doing live events again, but you know how it is at those live events. I don't care if I'm speaking for 6 hours that day, which I've done many times, and we would always kind of gather everybody, sit down and have a beer, get some dinner, and even some of the attendees would join us. And after doing that enough times, a lot of people are like, man, this is great. I'm getting really some one-on-one time with you. Can ask questions about things that I didn't think about before in a more relaxed environment. And that's what I'm really hoping to have with everybody tonight. But I'm excited about what's coming in the future, and that's probably the best place to start. For people who don't know me, one of the things I'm known for in the industry is the research, right? Understanding the stats, studying the stats. And I've just gotten into a habit of doing that over the last 12 years. And I've been pretty darn accurate on projections and everything else. And, we had the big wave, the blow up in the industry back in 2010 and all the, years within that, give or take. And now the industry after that became its own niche. It grew into its own thing to the point where we have people who just have portfolios, of stocks and bonds, and they have some real estate. Now they have some notes. It's more stocks, bonds, real estate, and notes, which is great for our industry. It's been very, very steady, but we're definitely going to see an influx of inventory. So if you missed the last time when we had this huge influx of inventory and we were buying non-performing notes at 20, 30 cents on the dollar bringing what the property is worth. I mean, those were crazy good times, crazy good numbers. If you missed that, you're going to get a second chance of that towards the end of this year. So the time to prepare is now. I am not saying it's going to be the same size. That's already been determined. It's not going to be to the same level it was before, but certainly it's going to be a nice little second wave for us on bigger inventory here. And that's what people have been waiting for. A lot of my clients, they like the performing notes, but they also realize there's a good market in buying sub-performing loans, getting those loans reperforming, or ending up, if the person simply does not have the ability or motivation to make the payments, then it's time for them to move on, and we let them out of the house without a foreclosure and things like that. So it makes a lot of sense for everybody to get prepared here today. And ultimately in September, what I'd like to really dive into are what are the best techniques to utilize within the note business and the real estate business, by the way, towards the end of this year, the final quarter of this year, and also into next year. So that's the ultimate oversight of what we're doing here. And that, I think, is going to be critical for everybody.
So what we'll do towards the kind of throughout is we'll field some Q&A. So just go ahead and put it in the Q&A box there. We'll just have a nice little fireside chat, and we'll do it throughout and at the end. So we got a lot of good people. We got some very seasoned people on. So I see Marty's on, and Matt's on, and Dirk's on, and of course John. So a lot of seasoned people on. So y'all, really we reserve this to just kind of have a little bit of an open dialogue. So fire off your questions there, and we'll have an open conversation.
Yeah,
we can.
And we've got some questions. I think that while we're waiting for questions there, we've got questions that were submitted ahead of time, I believe.
Yep, we do. Yep.
Yeah. So I'll just go over the call that I had earlier today while you guys are, if you want to raise your hand, we can bring you on live as well. So if it's a more in-depth question that you want to ask Kevin, then that's fine. And always, there's no such thing as a dumb question. Unless Aaron tells you it's dumb, then it might be dumb, but that's his thing. So, but anyway, I had a call today, Kevin, and this was an interesting deal where a guy is behind on his mortgage since March, and the bank, it's a small community bank apparently, and they're interested in selling the note. They didn't specify what price they would take, but they were open to offers on it. Now, the note is a 6% interest rate. All right. The guy's got equity in it. He owes like 140. The property is worth like 240. All right. A lot of sentimental value. He wants to stay in the home, had a previous bankruptcy, kept the house, and, has been late. Right. But he's also got a balloon on this note. So the question, and he wants to stay in the house. So essentially what he's looking is to have somebody buy this note that can buy it at a discount, service it while he pays it, and all that. So your approach with this idea, what's the first thing you're looking for here so far? And let me know if there's more information you think you need that I can maybe.
Yeah, great. Just when a bank is selling a note, right away that tells you that it was a note that either was non-conforming because they didn't sell it to Fannie Mae or Freddie Mac, or they simply retain that in their own portfolio. So most banks will create loans, immediately sell those loans to the secondary markets, Fannie Mae, Freddie Mac, Ginnie Mae. They didn't do that in this case. Otherwise, they couldn't really sell it or wouldn't sell it direct. It's more than likely that they have it in their own portfolio. Small banks are the banks that do from time to time sell notes because they own them outright. They just hold them in a portfolio, hence the term portfolio lender. So I'm assuming that's what it is to begin with. Then the next thing I would look at, so you want, obviously there'll be communication with the bank on that and onto what the purchase price is. The way I look at balloons is I assume that the people are probably not going to be able to pay it. I mean, that's when I first see a note with a balloon, I'm like, all right, well, they're not going to pay that, especially when the balloon's around the corner, a year or so away. I've seen a couple of notes over the past couple of weeks, people are selling and they have a balloon next year. I'm going, well, they're selling now because they know this person's not going to pay the balloon, right? They want to be cashed out, which is fine because if you purchase this note directly from the bank and then modify the loan, you can take the balloon away, you can move the balloon back. I mean, if you've got a cooperative borrower, which it sounds obviously like you do, man, that is great for a note investor, because then they're wide open. Then it's a negotiation on it. So what'll be important here on the is two things. Buying this note from the bank at one price is one thing. So the bank will probably not cut you the type of deal that a motivated seller on the open market would, right? They can shop around. They probably have other outlets that they can go to. So I don't see a huge discount there, but that's not where the money's really going to be made on this one. It's going to be taking that loan and modifying it the right way. And that would be something to look at. Now, normally on a deal like that, you don't have the luxury of, well, let me work with the bank, but I'm also working with the borrower here to see what we can do. So there may be a bit of a dance involved with that, but that's a good opportunity for someone to at least look at. And your skill set there is going to have to be creative financing. What can we do to make this loan work better? Did you have specific numbers or something you wanted to look at that? But just overall, that would be the approach I would take to something like that.
Yeah, I sort of had the same thought in terms of the balloon. Is like, all right, well, first of all, when is it happening? And two, what's their strategy to get out of that? Because at some point they're going to have to get out of it, right? So if you buy that note, I guess you have the option of switching up the balloon payment or not, right? Like you could leave it as is and see what happens, right?
Years ago, balloons were a technique that people would do to shorten the payoff, and it made the loan more valuable. Now we're talking, almost 30 years ago.
Yeah.
But because people could get refinanced and property values were up and everything else, but today they're almost meaningless. If I was going to create a note for somebody, I have a house, I'm going to sell them, and I'm going to sell them on seller financing, I'm not even going to bother with a balloon because it's almost meaningless because, like I said, most investors go, well, yeah, they're probably not going to pay that anyway, and I'll have to extend that particular balloon because let's face it, people can pay off a balloon at any point, anyhow. So I don't see that a balloon as a value add, but in a case like this where they do have a balloon, you could keep it in there, sure, no problem. You probably want to push it back a little bit. You'd make a little bit more money on the note. The other part of this, it sounds again, which is a value add to me, is the person's motivated. They're the ones that reached out to you, right, and said, I have a problem, and how can you get involved? And if the bank will sell it to you, that's great. So negotiating with the bank is one part of this, and get the best deal obviously you can. If it's at 6%, what kind of a yield would a bank give up on it on a discount? Really is going to depend, which they probably won't tell you about, but really is going to depend upon how many non-performing notes do they have on their books. If let's say this is their only one, I'm just going to use extreme example here, but if this is the only loan, non-performing loan they have in their portfolio, they're under no pressure of penalty from FDIC or anything like that. They're just not. If they're at a point where they're about 7% of their portfolio is non-performing, now they've got some pressure. Now they'll become more motivated, and you may end up getting a good discount on something like this, but that they won't really disclose to you, I'm sure. There was a bank's, oh boy, man, I got to think of this one. I haven't gone to this site in a while. I think it's annualreports.com. Let me just look at that real quick. Annualreports.com. Yeah. This is a good one, everybody. This is juicy right here. I haven't talked about this in years. But annualreports.com, you can put in a company name there, a bank name, and it will show you their reports. And you're not going to go through the whole thing, but you could at least have an indicator of what percentage of non-performing assets do they have in their portfolio versus the full portfolio. And that would be a good thing to research. So if you were going to make an offer, I'd like to go in armed with a lot of information. So I might go to that website, look them up and say, they're not really under pressure. That's one thing. But if they're up to upwards again, 5% is kind of the yellow flag, 7% red flag as far as the FDIC is concerned when it comes to non-performing assets as it relates to the other. So let's say they're not that motivated and you get it at an 8% yield. You start to think, well, is an 8% yield worth it where I could put that capital somewhere else? That's what's going to be the more challenging part of this, because on the loan modification, you're normally not going to up the interest rate. You're probably more likely to stretch the loan, or have them do some kind of a pay down. If they've got some money to pay down the loan up front to offset your cost, that might work. So if it's an interesting scenario where you have access to the borrower and talking about what they might want to do, I'd do some number crunching on that and say, how can I make that deal work? And think maybe the bank would give you a price it at about an 8% yield is my guess on that, unless they're more motivated.
So there's another resource that I'll share in addition to the one you just did, Kevin, and it's definitely not for everyone, because there is work to put into it. Imagine that work. You got to do some freaking work for, but it's called discoverydata.com. I doubt you've even looked at it, but basically what it is, they're a pretty well-known data aggregator in the financial services space. And so like if you're ever wanting to find asset managers, RIAs, advisors, that manage portfolios of loans, like you can reach out to them. And the context of it is you get access to the data, you run a little campaign to see who has what, and if they want to sell some or a portion of it or all of it. But it's not cheap data, but it's very, very good data. Like there's a company out of Southern California that I used to work with, and the whole reason I found out about this is they're a wealth manager, and they had a small chunk of their portfolio. It was mainly in public securities and equities, but they had a chunk of it that was also in performing and non-performing notes. So they had this little asset management division, and then come to find out a lot of these wealth managers have that. It's just it's not like generally well known, and they don't talk about it, but they just have a shit ton of money. So they're looking at ways to diversify. So I used to pull that list and just, see who was doing what and if they had anything. And it definitely works, but there's quite a bit of work to do to get organized and do it. So if you're willing to put in that effort, then there you go. That's a great little resource. And you can fill out their little contact button, and a rep will contact you, and you can kind of go through the process. But
yeah, going to banks directly to buy notes, and I know there's a couple of people out there that teach that. My response to all of that is number one, to your point, it does take a lot of effort, and I've never ever met anybody who says, "Yep, that's all I do in my note business. I go directly to banks, and that's how I get all my bit." I've never heard it. I don't know if it's out there or not. Maybe it is, but in all the years I've been doing this, I've never heard anybody make it successfully just with that part. Having said that, if you have small local banks, credit unions, those sorts of things, those are really the only two institutions that are going to be portfolio lenders still. The bigger banks, forget about it. You're not going into Bank of America and, talking to their loss mitigation department, to buy a $50,000 note. It doesn't do anything. But a small bank certainly could do it. There's a couple of challenges with that. And that can be boiled down to this. If you are working directly with a bank, have the ability to make quick decisions, whether that is to buy the note or pass on the note. If you string them out and say, I'm doing this, I'm doing that, give me 30 days, and then you don't close, you're done. You are done with that bank. They will never send another note your way, because the person at that bank, it's their job to get rid of that. You can't string them out. And unfortunately, fair or not, if you're working with the bank and they've sent you a couple of different deals and you passed on both of them, they're also probably going to go, you're not getting any more. You know, whether that's right or wrong, they may have sent you notes that don't quite fall into your criteria, but they need to move notes, you know, so that's kind of how it works on that. And that's why a lot of people do stay away from going directly to them. I think going direct to consumers is going to be one of the things that you may want to incorporate into your business towards the end of this year, next year, for sure. It's still an untapped market. It is a market that I think is going to fill a need. I mean, when we think about, everybody's looking at these forbearances and how many notes are going to be coming out of that, it's going to be around 2 million. Okay. So what's coming out of that? And that's our new inventory. But on the other side too, there are landlords, certainly there are note holders potentially who haven't been receiving payments for quite some time. And they may want to cash out of those notes. And I think it's a good opportunity to dip your toe into that marketplace. I know I've got a handful of my clients that are still approaching that. Now I start to, one guy in particular, I'm seeing about 3, 4, 5 deals a week he's sending me to make purchase offers on. So it's definitely a market that's out there. Again, takes a little bit more effort. It's not a passive investor type of approach to the business. What else you got there, Ben? I don't know if Aaron got the list of questions that some people had submitted. You want to hit those first? And by the way, everybody, you have questions on anything in the note business, this is your chance. I mean, this is your chance.
Yeah, throw them up.
The one thing that I was thinking about on the, like, I want to know what some people are doing to kind of prepare. Like, what are you, you know, are people like, have y'all been like looking at tapes? Have you been making offers? Have you been like building your network? We had such like a weird period, you know, through all of last year and even into the Q1 of this year. Like, I'm just curious, like, what people are doing to like keep, you know, sharpen the saw, if you will, you know, and keep up to speed on stuff, or you just like waiting and then boom, it happens and you're like, well, you weren't really prepared. So I'm just kind of curious what people are doing to prepare. Are you keeping up to speed on your due diligence efforts? Are you writing offers? Are you raising capital, not raising capital, have your own capital that you're just sitting in cash? Like, I'm kind of like, I don't know. I feel like because we haven't, everything's kind of been so virtual and we're not like having, you know, lunches or dinners or networking conferences and stuff. Like, everybody's just kind of been living out on their own in a little hole in the wall or under a rocker, so to speak, you know. Maybe I'm the only one that's crazy thinking this, but I don't think I am. I'm just curious because everybody's like, I don't hear a bunch of chatter other than like, you know, oh, the moratoriums got extended or blah, blah, blah. And this came out and this came out. It's like, I just hear kind of like a bunch of complaining and not like, well, what are you doing to like prepare for what's coming, you know?
Yeah. And also, if you raise your hand and you want to talk about that or interact that way, please do that. There's a little raise hand key on your window here for Zoom webinar window, and you can do that as well. I'll tell you, just to extend upon your thought process there, I look at notes every day. That's my thing, right? I help clients every day, so I'm in it. And I can tell you this, the clients of mine who are in the habit of looking at deals on a regular basis are the ones that stay sharp. It doesn't mean they have to buy all the time, but they're looking, they're getting, I had a client just say, you know what, she said, I'm getting back in the habit of looking at notes on a regular basis. And you really have to do that. I used to use in my live events, and I probably have it on my video training courses, but the ability to identify a deal, I always say, that's the muscle you want to exercise. It's not the money and all that stuff. Really at its core, the money and everything's important, but the ability to identify a deal can bring you to the money if you don't have your own capital, et cetera, et cetera. And that is very much like a muscle. If you get away from it, and because inevitably what's going to happen is inventory is going to start to show up in greater numbers in August, right? So you're going to have people that go, oh, by September, they're going, oh, I hear the note inventory's up, and they're coming in and looking at notes. They've got to go through really that learning curve all over again versus the people who are looking at that. And also, attending events like this is a positive thing, but there's nothing better than just actually going through a deal and analyzing the thing. And it does make a difference. I went through one yesterday, and that had a full bankruptcy. We were going through all the bankruptcy documents. We were going through all the payments, how they were calculating those. Is that an arrearage account or not? So there's things that, you kind of forget if you're not staying in touch with the business. Attending things like this, great. There's a part of a touch there, but I'm telling you, if you want to get ready for the last quarter of the year here with the inventory bump, I would start getting in the habit again of just going through deals. And if there's things you don't understand, then research them, or I take on new clients or whatever it is. That's an important thing to do for sure.
Question here for you, Kevin. It says, Juana's asking, what advice would you give for a new investor on how to start building networks and finding opportunities in this space?
Great. Networking is really a couple of different things. You have to do it personally, or you have to get into an existing network, right? And that's what meetup groups are all about, real estate clubs and attending events and things like our Inner Circle. We have an event coming up in September, Inner Circle. It's going to be a small event, 30 people. And with 30 people over the course of 2 days, you're going to have plenty of opportunity to network. I've seen better results in networking at live events versus virtual events. There's something about being there in person in a more relaxed setting, because we'll have, class time, but we'll also have after hours and really getting to know people and seeing if there's a synergy and opportunities on both parties. It's harder, I think, for people, especially new to the business, if you go to networking places online, meetup groups, Bigger Pockets, some of the social media things. It's a little harder to make a connection there. At least that's my thoughts on that. What was the second part of that? The networking and what else?
Yeah, it was building networks. Hang on one second.
I got it. And finding opportunities. Yeah. Finding out. So on the networking, do try to attend events, even if it's virtual, but ultimately plan on attending live events so that you can do that. Bigger events, like we have our annual event. And Aaron, when's that coming up? December?
February. Doing it in February.
February. Okay. Yeah. February. And that's a much bigger event. But if you can get to obviously the smaller events in person, and eventually that will start to happen. I think another thing is if you do start to look at notes, and it's easy to look at notes today, but probably more simple places to go, something like PaperStack, and go online. It's free. You could start to go through inventory there, and you start to see some names. And if you start looking at assets, you'll kind of have some things together there. And you may end up seeing some companies or some investors that you end up conversing with, and it could start that way as well. As far as sources and things like that, one of the things with Noteworthy is, we know everybody in the industry, right? Aaron has all kinds of lists and contacts and things like that you can tap into as a part of that. We also put vendors and such on the newsletter, right? I mean, there's other ways to do it that way as well. So you got to be, again, proactive on that. The opportunities and the as far as note opportunities, again, there's websites you can look at. There's companies that you can register with and get inventory. That's not a difficult thing to do today to tap into inventory, I would say if you're new, start with something more simple that gives you information that also prices assets, and that would be PaperStack. In my opinion, would be probably the best place to start. There's other ones, but again, completely different bidding systems, all sorts of things. PaperStack's pretty cut and dry.
So I'll give some additional commentary, and then we'll get back to some more questions. I know Matt just posted a few, but one of the things I'll say, like on networking, finding deals and opportunities, like it's no secret that I'm not like super active in social media. It's not that I don't want to be, it's just I don't really make the time for it. And there's so much garbage out there that I'm kind of like a little disillusioned by it personally. And I'm generally just a private person. So I kind of struggle with some of that, but in person and live events, I love that. And that's where I make real connections personally. That works well for me. And that's where I've met some of my very closest friends, Matt, of which is one, and who's chiming in. But, you know, we met through live events and you know, mutual friendships. But he runs a Facebook group called Note and Mortgage Investing Simplified. That's a great kind of unbiased, like, you know, facts, not, you know, opinions really. It's like, it's geared more towards like factual evidence and stuff. That's good. You know, bigger pocket, sure. But a lot of everybody kind of has like their own agenda that they push forth. And that, I guess that's kind of like, you know, even we kind of have like, I don't really want to call it our own agenda. We just have a network and community, publish a newsletter and do our live events and stuff. Like that is how we monetize, you know, the publishing side of the business. But other than that, there's no real agenda. Like you don't need to invest with us. You don't need to buy assets from us. Like we don't care. That's not like what we do.
Yeah.
So I'm kind of a little bit disillusioned by that. And, you know, it can be good. And a lot of people are just kind of like, don't know what the hell they're talking about anyways, you know, or they're just like, they might as well have been doing like a Google search or something and trying to find out. And I'm just like, I don't buy into that. So anyways, that's me putting in like my own personal opinion. Like you can find some like good data out there and some stuff, but it's like, it's going to live stuff and like meeting real people, like doing the business. I don't know what the hell you're doing online.
Right.
Like if you're doing deals, or if you're buying assets, or you're raising money, like I don't know. I was like, well, I sure as heck know if I can sit down with you or see you in person or do that, I can get a better feel. And you know, I went to some of those institutional events like IMN and it made some good contacts and stuff in there. And you know, those are pretty good, and met some good people that you can get registered in. So Matt asked a question like, what advantages can an individual investor implement to be more competitive against larger funds or institutional lenders and other investors? I'm sorry, Ben, you had your hand raised?
I did. I was going to give you a devil's advocate to that, the
Okay.
social media thing. I think it's important. Like it's vastly important. I mean,
I know you love it.
Just because Aaron's some old fuddy-duddy that doesn't know how to do a Facebook live post or anything doesn't mean that it's not going to work for you. So you listen. I'm just telling you that somebody that over the last year has made 6 figures because of Instagram. It works if you work it, but you just have to have a consistent plan. And you can meet great people. You're going to meet some scumbags and, you know, people that aren't worth a damn on social media for sure. Just like if you go to a live event, you know, it doesn't change. It's just the modem in which you're the
modus operandi,
MO in which you're meeting them. Right. So if you have a good social media presence, you know, start out just by asking questions. You know, and you're gonna, you know, hey, who's in my network that's into note investing, that buys notes or real estate or whatever. Start building your network that way as well if you're not already, and it can really pay off. So I've met some great people on social media.
Well, that's why we're partners and friends, Ben. So you can do all that and do social media.
All right. So sorry, you can go. I just wanted to make that point because I don't think you'd want to discount it completely. If you're private like Aaron is, be private and just go to the live events. But if you're not scared to put yourself out there and just like and be comfortable with it, do it.
Yeah. Common denominator on both approaches is you're proactive, right? So whether it's online or whether it's in person,
That's
you
it.
got to be proactive.
You got to do it.
Because it did crack me up sometimes at live events. I would be putting people together. I'm like, why are you guys sitting over here and not talking to, so it's like, let me put you people together and talk, that's what the whole live events are for. So yeah, it's all about being proactive on that. All right. So we've got a bunch of questions here. Did you want to start with the one that you read first, Aaron?
No, you can just bang through them one by one.
Okay. What is it that a bank with a fiduciary duty sell for the described discount? So I think what he's asking there is, does a bank have a fiduciary relationship with their client? And that means it's a privileged relationship. They have to look out for that party or not. And the answer is they really don't. The bank does, when they create the loan, they have to be honest up front and everything else, but they don't have a fiduciary relationship with them. They just have to be honest and open and have all the documentation for the loan. All of the loans that you'll see that are bank originated, and really the ones that are REO company originated or seller finance originated, they do have a clause in there that clearly says that the note holder, the note originator, has the right to sell that note to anybody at any time without borrower's permission. So that's right in all of those contracts. It's one of the things that you look at. And by the way, by extension, it also says that in a lot of them, it says that they can sell part of the note. And that's where people don't understand parcels are going, well, how can you sell just part of the note? It's in the contract that says I have the right to do it. So that's an easy thing for the banks to do. And for the banks, that loan, when it becomes non-performing, becomes now a deficit. It becomes a negative asset for them. It's not a good thing for them to have on their books because they're regulated. So the regulations is ultimately what puts them on the pressure to get rid of that note, which they can do in two ways: sell the note quick, easy, at a discount, or foreclose on the property, lengthy, more expensive, and probably still at a discount. And now they take back a liability through the property. So that loan, when it goes negative, does become a liability, a non-asset, if you will. But they have every right to sell that. And that's what banks do. I mean, most 98% of all loans in the US today are just immediately sold to Fannie Mae, Freddie Mac, and Ginnie Mae. That's how our system is set up. The banks just act as the servicing companies. What advantages can an individual investor implement to be more competitive against the larger funds, institutional lenders, and other investors? If you don't have the capital, you can't compete with a larger fund. Simple. So what do? You build a relationship with those larger funds. And how can you do that? How do we know what companies to look for? Which ones are investor friendly? Ultimately, big companies buy in bulk, and then there's a tendency to sell off in smaller pieces. That's where you come in. So instead of looking at them for competition, most of them we need in the business. If we took this from the higher level, where Fannie Mae sells $1 billion worth of funds last month, which they did, maybe 2 billion, I have to go back and look that up, but let's just say $1 billion worth of notes last month. We need big companies to go in there and buy those large pools for a couple $100 million or more each. They ultimately carve off what they don't want, goes to a mid-range fund. That fund typically buys at a discount, turns around and resells them at a markup price. So they do ultimately need the retail investor, the one-off note investor, to work their business. So you want to build a relationship with them. Let me give you one simple insider thing that once I tell you, you're going to go, that totally makes sense. And some of the veterans on here too might look at this too. When you start to, again, go through due diligence on a regular basis, I have a very patternized due diligence. I teach it at a deep level because ultimately it does so many different things to benefit you. One of the side benefits is you look at enough deals, you start to see some of these same sellers, right? And then you see that seller company, let's say A sells it to company B, and then B is selling it to C, and you're buying from company C. And then you look at another note, and you see that same company B in there selling again to somebody else. Well, why don't you go, I'm going to reach out to company B. and buy from them direct instead of buying from a third buyer. I'm going to go right up the chain of events there. So that's one of the things that it's just so simple, but just look at all these different assignments, all these different allonges, and go, well, heck, let me jump to the front of the line. Why am I end up buying at this level? And that's a simple way to do it as well. So for the most part, they need us. They are not really competitors. That's very different in the regular real estate world. In the regular real estate world, what's everybody talking about now? BlackRock is buying up homes and renting them, right? So we're going to have a lot of homes that are a big company owned. Blackstone, is it Blackstone or BlackRock? One of those is buying up a bunch of homes, and they're just going to rent those properties out. And that's becoming a big model once again. As a real estate investor, you've got direct competition. That same company in the last crash, Blackstone, was buying about 40 to 50,000 homes per month at their peak. So you can't compete at that level. At that level, I know you know that, Matt, but you can't. But they ultimately, needed us to really buy up these individual notes. So they're not competitors. Approach them a different way and build a relationship with those companies, and then you can start to buy directly from those funds instead of buying 3 or 4 down the chain.
So I'll give some additional commentary on what you can implement to be more competitive, and that's like, you ever heard the term like specialized knowledge?
Mm-hmm.
And having a specific skill set, and that's typically why people buy home study courses or go back to school, or network, when they're trying to learn a different industry or learn a different investment that they're wanting to explore. Like notes is a great example. So like we have a subset of specialized knowledge. We have like advanced underwriting skills and techniques we can implement, a vast amount of collections and, and a buying network and going after that. So I think that's really, partly what Matt was looking for on, what things we can implement to be more competitive against some of those institutional people. It's like, well, we have like, we're more nimble and agile to like, having developed those skills to go in and look at things a little bit differently and move faster. You know what I'm saying?
Mm-hmm. Yep. Absolutely here. How we doing on time? Pretty good.
Yeah.
Let's see. What is needed to qualify with brokers and or lenders to gain access opportunities and note sale? What is needed to qualify with brokers and lenders? Okay, 2 different things there. I'm assuming you're meaning mortgage brokers that might be selling notes and or direct lenders there. So I'm kind of going to reframe your question just so I'm put it in the proper context for everybody there. What do you need to qualify a note from anybody, whether it comes from somebody who's brokering a note, somebody who originated a note, or somebody who is selling on the secondary market? To qualify for it, you have to have the money to buy it. I mean, that's really it. That doesn't mean you bought a good note or a bad. To qualify, that's all it takes is the ability to buy it and sign a contract to that fact. So there's no qualification, meaning there's no license to buy those notes. That may change in the future. Most of the licensing is around debt collection, which you're going to outsource. Some of it is around servicing of notes. So the note industry itself. And the one caveat where I think they'll have problems trying to change that law is notes are considered personal property. That's why notes are not recorded at the courthouse. You can find mortgages at the courthouse. You can find land contracts. You can find deeds of trust at the courthouse because that's what attaches that note to the real property. So it's a part of real property records. But the note itself is not. So when we get to this point in our country where we can't buy and sell our own personal property, we've got bigger problems. So they're going to have a tough time changing that law where everybody has to be licensed to create a note or something like that. So really, no qualifications right now. There may be on the debt collection side, and there may be on the servicing side. I hope that answered your question, or I hope that was your question. Please.
I'd say having a track record of having closed on other trades or deals, any references you can provide, like from attorneys or servicers that you've worked with.
Proper
You're,
paperwork, Dodd-Frank compliant.
yeah, and you're a real freaking business. How about that for one?
Yeah.
Like you share like where where you're incorporated, or if you're an LLC, like what your business structure is, how you're set up, is in active and good standing, and not like suspended or inactive. Like all that's legit too. Having like, a web presence, a social media presence, and Ben will be happy to set up your social media profile for you for free. Just kidding. He's not even listening to me. So that, those are some additional good things that you want to have set up as well to like show your legitimacy.
Mhm. Yeah, and then by extension, the question is kind of a part two to that same question, at least in my mind, which is brokers. So first of all, in the note business itself, we use the term broker. Anything outside of a group like this, or if you have a website, if you're doing direct marketing, do not use the term broker. That will get you in trouble, because there is a position called a mortgage broker. And the way the laws are written, if you write something where a person of reasonable mind could just make an assumption that you are a licensed mortgage broker, you cross that line. That's really the test of it. They call it the prudent man test, right? So, when a prudent person, if you put yourself down there as a note broker in your advertising, on your business card, or anything to the general population, that's not a big leap to say, oh, like a mortgage broker, and you're not a mortgage broker. So it's always note buyer, that sort of thing. And if you find notes that don't fit your criteria, you can bring them to somebody else. So we got to be a little careful of that. Just want to clarify that. So again, there are no licensed note brokers at all, because there is no license that exists to do that. In the business, we do have note brokers, which you can associate very closely to wholesalers on the real estate side. Wholesalers go out, they find a deal, they get it under contract, they take that deal to somebody else and make a spread, right? And that's what the arbitrage is in your part of your question there. So that's really the same thing. You could find notes, go through it, and then sell that, or have somebody else purchase that note, or partner with them, or all kinds of various structures that you can do for that. My thought process, and I've said this from day one, there's nothing wrong with buying a note that's being so-called brokered, right? Buying a note wholesaler. But I believe you should know it's being brokered. Okay? You may not know the fee, but my thought process, and through my experience, is if somebody's not disclosing that they're brokering the note and they're representing that they're the note owner, I'm going to find out, because I know how the hell to do my due diligence, and I'm going to know that they're not brokering it. They withheld that information, which in my mind immediately goes, what else are they going to withhold from me? What else am I dealing with? And sometimes you get in these so-called daisy chains of brokers, where it's more than one broker involved, and that's all got to be sorted out. So nothing wrong with that. If somebody, look, when I was buying just regular real estate, I had a bird dog network. I would pay them money every deal they brought me. It saved me from having to go out and find everything. So I get that the concept of working with somebody, but I think that's a relationship that ultimately you build up with that broker. The brokers who do the most successful in this business are upfront about it. I've got plenty of, they know where to take notes. They know who the best buyers are going to get the best prices. And that's one of the arts of properly brokering notes, is knowing that and establishing those relationships, going back to Juana's original question, having that network, because if it's just a note on land, you may not get the best offer from a Grand Bank or somebody like that. You're going to take it somewhere else. If it's on a single family home, then you want to take it here. What if it's on a retail center? Well, take it over there. You start to know who pays the best prices, who specializes in what. And I'm trying to go through these and answer all the questions, but I'm trying to be time sensitive as well.
It's funny how telling the truth creates good relationships.
Yeah, exactly.
Weird, So every wholesaler I've ever had a good relationship with, they've always been upfront about, hey, I have this deal under contract. I don't know why anybody would keep that a secret, because exactly what Kevin said. If you're keeping that a secret from me, what else?
Yeah.
Like,
Because that's a simple one. I don't care if look, if it meets my investment criteria, I don't care if you're making some money in it.
yeah, I want my wholesalers to make money. You know,
You
that
market
means
it,
they can go find a market for more deals, you know? So,
yeah, 100%.
I guess one thing to like just be cognizant of, to be careful, like you're not using the terminology is, you know, if you're a licensed mortgage broker, like you're talking about points, taking points. Like, you know, in the note business, we're not doing that, so to speak. Like we're not using points and taking points, so to speak. You know, we're you know, you exchanging things and, you know, buying and selling, you know, at the same time, you know, if you will. Like that's really giving more context of, you know, licensed versus unlicensed, what you should be saying and representing, what you shouldn't be, what you should not be doing, you know, and saying that. So like, you know, Jeff Armstrong, been in the business for a number of years. He's a licensed mortgage broker as well. You know, he buys and sells notes, buys and sells property, things, but he's also a licensed mortgage broker and can take points and talks about that. But not everybody is licensed to do so, let alone like in all states. So just another thing to like, you know, be aware. Now, if you decide to go get licensed, that's totally cool. But you know, you now have opened yourself up to other compliance and risk factors that, you know, you're now regulated, like in some of the things you can and can't do as having been a mortgage broker. Then did you had your MLO license, didn't you? Did you let that lapse? Is it still active?
sorry, I was on mute.
Yeah.
No, I let it go. I wasn't using it. So,
well, I did too. Once they started with the continuing education and all the other stuff, I'm like that.
yeah, it was a time for that.
I'll let that one go. Yeah, that one stuck up. All right.
I saw something there that I thought was interesting. Somebody had, I think
ground floor,
groundfloor.com.
Yeah.
I had not heard of that. So it looks like micro loans for real estate, which is kind of interesting.
Yeah.
Aren't they selling? It looks like they're offer short-term high-yield real estate debt instruments. And yeah, based on it's $10 and minimum $10 annual returns. I think it's a fund, and you know that's the thing on funds, and you've got to be careful. Funds are very popular right now. Everybody wants a fund. Everyone wants to build a fund. It doesn't mean that they're great at managing the fund. It doesn't mean that the fund will make money, even if it's done on a crowdsourcing type of platform. So understanding who they are, what they've managed, what their experience is important. I'm not familiar with Ground Floor, but I can tell you that's what it is. It's a crowdfunding platform, SEC approved, more than likely. I'm projecting here, but that's what they're doing. Don't expect to make the same returns. You know, in a fund, you're never going to get paid as much as you could on an individual note. Nothing wrong with investing in a fund. Don't get me wrong, but the deal is it's being managed by somebody else. Those people are going to get paid. All you're doing is contributing your money, not your opinion, not your thoughts. You're contributing your money. You're putting them in charge, and your returns are, of course, going to be less from that. And then when do they pay out? A lot of the funds will pay out annually, semi-annually, maybe quarterly, not monthly, right? If you're buying an individual note, yes, it takes more effort. You make the decisions to buy. You're managing, obviously, yourself, but you'll make a higher return on that, and you'll get paid monthly, which a lot of investors get into this business for. So you just got to balance it out on what you like to do. Some people put a little money in a fund and buy their own notes. You know, that's totally up to you. Not familiar with that particular one, though. Let's see. And I don't know if he's kidding me here or not. What are some good reference books for new or newer investors? I heard something about a book, Real Estate Without Renters. I hope you tell me the truth, because that's cool. That's my book. I'm glad you heard about that. We got one around here somewhere. Yeah, Real Estate Without Renters is my book. It's on Amazon, and that's a great book. I did that. When did I do that, Aaron? A year and a half ago,
Yeah, yep,
something like
yep.
that.
Just
And
a year.
yeah, it's really good. You'll find it very insightful for the business and the way I've got it laid out there. So it's on Amazon. I don't know, $24 or something like that. You can get one of those if you sign up. I think with a Noteworthy newsletter, by the way, they're giving a book for free. So you may want to do that. Get both. Get a discount on the Noteworthy newsletter and get the book for free. And I think I'm signing those too, aren't I? Not that that adds value, but whatever. We'll be doing that. So yes, I do recommend that book, Matt. Very good. But also recommend you guys come out and see us in Orlando, right?
Yep, yeah. Do you
Get the dates and
yeah, we can do that. Ben, do you have a slide for that?
I do. Yeah. One second.
We'll put that up there.
Figure this out.
I'm trying to be conscious of everybody's time here. It flies, right? I love these formats. But man, you look up, you're like, oh man, we're going through here.
Yeah, so we're hosting a 2-day inner circle event. It's just 30 people, like Kevin said at the beginning. So coming up in September is going to be in Orlando. So Disney's open, just saying. If you got kids in the family and you want to come learn some stuff while they're hanging out and having probably a lot more fun, that's cool. But we're going to, basically cover everything that you see there. We're going to have some note OGs in the house that, original noteworthy guys from like the 80s that are still doing it and, sharing their insights of over 40 years in the business and, some great stuff. But you can go to noteworthyusa.com/events. And then we're doing tonight, this isn't like some sales pitch, but we're doing another one of these actually next week where we'll get a little bit deeper on some stuff. This was just more of a Q&A. But we're doing a $500 off, today. So you can go to noteworthyusa.com/events and put the promo code in noteworthy500 in at checkout, or you can buy one and get half off if you want to bring somebody with you or go in on it with somebody else. That you can do that too. And with the promo code noteworthy750.
And I promise you this, at this event, I'll be doing the bulk of the training. We've got a couple of guest speakers that are coming in, but bring a notepad with you. For those of you on this that have been to my live events, they know that, and they'll tell you, yeah, bring a couple of them, because it is going to be content, and you're going to want to take your own notes. There's reasons why I have people take notes and do that. I don't hand out slides, so don't expect to get, hey, here's all the slides that we're doing. That works against you. It drives me nuts really when I see that on most events. Sometimes it's necessary to have for factual information, but with this, we go through everything together. I lay out everything. Because of the size of this group, we'll have plenty of time to ask questions as we go through. And as I teach this, I explain this in every class. I don't care if you have a question at any time we're going through it, just say, throw up a hand. I'll give you the look, like, give me a second, and we'll get that answered, because I understand that if you're stuck on something and you don't ask that question at that time, I'm already a mile down the road, you're still stuck over here, and you just missed a whole bunch of information. So the way that I lay this out for you will definitely take you from learning something new, but over across that hurdle of application. I set up memorization techniques. I'll tell you how to take notes. I'll tell you what to build at the same time as we're going through this. So when you leave there, not only will you have all of this knowledge, but you're also going to have a plan of action that you built as we were going through that. And that's what makes it different, because it's one thing to learn about this. It's a whole different ball game when all of a sudden now, what do I do? When we don't want you to go home and go, man, that was great. The networking was great. The food was good. The party was good. And I learned some information, and then go, what do I do again? We want you to have all of that stuff plus a plan of action to get home. I'm going to focus on this on techniques that you're going to want to utilize that will show a lot of opportunity of combining real estate with real estate nodes into the end of this year and into next year. And what you're going to find is, as we start to see new inventory, as this business of node investing has been elevated in the real estate world, but also the financial world, these are the techniques that are going to give you the highest profit with the lowest risk moving forward. No doubt about it. So these are very forward-thinking concepts on what's going to be working, and we'll have plenty of time for Q&A. We'll have networking afterwards, and I think you're going to find it's going to be just a fantastic event, and especially being live again in person and enjoying ourselves and learning. You always learn better in a fun environment, so we plan on providing that.
So next week, like Kevin said, we'll go over some more details. We'll have some slides. We'll share some research and, recent data points to look at. We'll also do some Q&A, but today we just wanted to kind of catch up with everybody, have a little bit of Q&A, see what's going on. And that was really all we wanted to do, and keep it light.
Let me just add this. On the next one of these quick Zooms, I'm going to take 3 techniques. That's going to be my goal. We'll see if we can get to all 3 and outline them for you. 3 techniques. There are going to be a lot more that I'll cover, obviously, at the Inner Circle event when you're with me for 2 days. But I want to give you a taste of these concepts and how to apply these things. And we'll maybe get to 3, maybe I'll only get 2, but we'll do it at the depth level that we can do. And that's the 15th. So next Thursday at the same time, wherever your time zone is, the same time it's that this one started. It's going to be for next week. And then the Inner Circle, of course, will be live in September.
Awesome.
Cool, man.
Ben, you have
These
anything
discounts,
else?
Just so we're clear, these discounts apply now, and then the price goes up a little bit next week, and then it's full price after that, correct?
That's it.
Yeah. Yep. If you're serious and you want to continue on and have some great networking and continue your education, this is a small drop in the bucket, to continue your education and get more adequately prepared. I like to think of it, it's like a mini workshop, kind of a 6-week semester of school for those of you that went to college. Like this is what you do to sharpen the saw and get going again. You got to practice while you're getting ready before you get in the game. And so this is practice, and this is a good opportunity to do that. You'll definitely want to be there. I'll be flying out, so I'll be there as well in attendance, and Ben, of course, will be there. But this will be a good event. We have a few special mystery guest speakers that are coming in, like Ben gave a little bit of a preview to. One of them's coming in from Colorado, so it'll be really good. We hope you can make it.
Aaron, I saw a couple messages that the 1-person discount code is not working, so you might want to check that real quick.
All lowercase.
All lowercase.
All lowercase.
Don't
No
do
space.
that. Don't do that capital N.
Okay.
So it's all lowercase. Sorry about that. That's what it is. So it's all lowercase.
My fault.
No, it's not. It's no worries. It's unfortunately the software is not always the greatest, and
There you go.
Awesome.
Lowercase. No worthy 500. All right, guys. Well,
this is fun. I hope everybody enjoyed that, and look forward to talking to you again.
yeah, and by the way, if you're not already, get involved in our Facebook group, Noteworthy USA Investors. You can get in there. Great place to network, find other people. If you're good with social media, Aaron, probably not a fit for you, but that's okay. So.
Here's what I'll say to add to that, because I know everybody's personality is different. I'll add a little bit more context to that. I'm very engaged with liking, and like adding like a heart emoji or a rocket ship or whatever. Like I'll make it known that I'm watching, lurking, but that's the extent of it. Like
social stalker. Yeah.
I'm a social media stalker. But I love telephone and text messaging. Ben knows it because I'll be like, "Can you hop on the phone right now?" He's like, "No, I'm busy." I was like, "Well, can we just like FaceTime each other right now?" He's like, it's like, no. Anyway, so whatever.
I wish you all could see how Aaron and I communicate. We communicate, I think, best through GIFs.
Through the GIFs,
Yeah, GIFs. Whatever, however you want to pronounce it. Like, I honestly, I think that's like our finest form of communication. So.
I love it. I love you guys. All right. Awesome.
All right, man.
We'll see you next week.
Good to see you guys.
Got it,
We'll see
bud.
you next week.